If you believe what they're saying, these Suitcoiners, they sound a lot like OG Bitcoiners or Bitcoiners circa 2015. And what they're saying is this is a currency that is independent of the government. It has a fixed supply. It's a hedge. It's censorship resistant. They're saying all the talking points. Welcome back to Bitcoin.com's The Weekly, which is the world's #1 recap and digest of the biggest stories in the Bitcoin and cryptoverse. I'm Graham Stone, joined by David Sensel, and this week we've got the US-China trade war taking a breather with a look at how that affects the Bitcoin and crypto markets. We've got Bitcoin ETF inflows rebounding in a massive way, Bitcoin reserves on exchanges at record lows, a huge new player in the Bitcoin corporate treasury space, and growing criticism that Bitcoin is being taken over by this new breed of people known as Suitcoiners. But before we get into all that, if you like this content, don't forget to follow us, hit like, and most importantly, light us up in the comments. Also, do yourself a favor and subscribe to David's weekly newsletter by entering your email address at Bitcoin.com. The newsletter, which provides a 5-minute end of the week summary of the most important Bitcoin and crypto stories of the week. It has tons of links to sources and extra reading if you want to go down the rabbit hole on the topic at hand. And this week's newsletter focused on the timely question of whether Bitcoin has decoupled from US equities. And I have to say that after thinking about that issue over the last several weeks and reading endless threads and articles on it, David, I think your framing of it in your weekly newsletter really hit the nail on the head, which was basically that even though Bitcoin may have decoupled recently, certainly its Pearson correlation, which is a phrase that you brought into there, thank you for educating me on that. The Pearson correlation shrank from 0.8 to 0.35 over the last month, meaning it's less correlated to US stocks. This decoupling, it's only apparent over a short time frame, and as you pointed out in the newsletter, it's not the first time Bitcoin has done that, so we shouldn't be too excited. In other words, we can't confidently say that like, oh, this is it, Bitcoin is decoupled, now it's the go-to safe haven asset. However, Bitcoin is performing well in the current environment for a variety of factors, and that's always been the case with Bitcoin. Like for investors with a long time horizon, let's say 5 years or more, and some strong risk tolerance, as we all know, there's a lot of volatility. Bitcoin can be viewed as a safe haven asset, at least in the sense, I think, that it provides you with protection against the endless debasement of fiat currency. Any thoughts there, David, before we jump into our first story of the weekly?
No, I would say I quite enjoyed writing this myself, because I would say the thesis I started with when I sat down and then I actually got into the data, I had to kind of scrap it and kind of reevaluate, which is just nice because it means I actually learned something myself. And I think the key takeaway for me is that kind of the decoupling narrative to me, when I broke it down, is really not a narrative about decoupling per se. It's kind of what decoupling means to people. And the thing that I kind of concluded was people don't really mean decoupling in the way that like the Pearson coefficient means, which is stocks go down and then Bitcoin goes down, right? So like there's like this movement or causality or this like correlation, right? Bitcoin isn't correlated, and historically, if you look at Bitcoin's history, it isn't well correlated at all, right? You can't really draw that many strong conclusions from this thing. But again, yeah, like what you're saying, like the thing that people kind of, I feel like instinctively mean, and I guess examining myself, what I meant was that it's this like safe haven asset, that it behaves like gold, because that's what we consider decoupled from equities. right? Gold is this thing. It's the hedge against volatility, and when you want something safe, that's what you go for. So, and then as you said, in that sense, depending on how you view Bitcoin, it isn't there yet, but it definitely is if you've been in the game for like more than 3 or 4 years, right? Like for sure, it's acted as a hedge against all that kind of stuff. So yeah.
All right, good stuff. Let's get into our first story of the week.
All right, so we're going to talk about U.S. and China, U.S.-China trade war. As everybody knows, it's been in the news for better part of a month. And last week, things kind of cooled off. And it really kind of kicked off with Donald Trump signaling that he is going to soften his stance on the trade war with China. He had several statements to this effect, saying that the 145% tariff will come down, quote, substantially. And I think later on he even emphasized that they won't be removed completely, but he wants to find a deal, and he wants to work with China. Now, the interesting thing is, or the kind of maddening thing about this whole situation is that news came out, and then later in the week, it was just more kind of news all over the place. So the Trump admin said, we are in talks with China. We're negotiating with them. We're talking to them daily. And then the next day, China released statements saying, no, we haven't talked with the Trump administration at all. Right? We're not doing anything with them. We have all these preconditions. And that kind of just leaves the market and me scratching your head going like, okay, so who's telling the truth? Who's not? Are they both kind of mixing the truth here? Anyway, it's a very, I think to me, Graham, it's like a very, it has a very Trump feel to it. This kind of uncertainty in that respect. I don't know if you found that puzzling at all last week.
Yeah. I don't know where I stand with the whole U.S.-China trade war, except I'm confident that it's whatever the end state here is, it's not going to be over like 145% tariffs, because if that were to happen, it effectively just means there's no trade between the U.S. and China, and I don't think that's possible. That would destroy the world. I mean, it's good. Something's got to give.
Yeah. So, like on this topic again, I'm going to go on a little rant here, but China is in the weaker position. They are definitely in the weaker position, and something that came out from the Chinese government last week really kind of made me angry. So on Thursday, the spokesperson for the Ministry of Foreign Affairs of China, Lin Jian, he stressed that the U.S. launched the trade war first, and China would combat the U.S. government's position. Quote, we will fight, and if fight we must, but our doors are open. If the U.S. wants to talk, dialogue and negotiation must be based on equality, respect, and mutual benefit. This is to say, America is the aggressor, and China's the victim here, and America needs to calm down and come to the table and be respectful. And man, I hate this. I hate all of it. I've talked about this before, but if you want to play this like kind of schoolyard or 6-year-old game of he did it first, China did it first. They did it first. Okay, the gall of this man is incredible, right? The entire Chinese economy is predicated on trade intervention. Now, tariffs are a form of trade intervention, but there are many kinds of forms of trade intervention, and the entirety of China's economy is trade interventionists, right? They
Oh,
take
wait. So, David, are you saying you're struggling to start a company up in China and keep all the IP to yourself these days?
exactly. Or how about this? How about this? Here's a head scratcher. China has huge GDP, and even the Chinese government is like, why don't Chinese people spend money? Why aren't they consumers? Where is the internal demand from our own people? And it's because of the trade intervention. The Chinese government, they take a lot of that money, most of it, and they take all those the taxes and everything that they should a lot of it that should be going to the Chinese people, making them consumers who have money to consume, and then they subsidize it with all the industry, the manufacturing, and the government itself. And yes, this is a formula that works until it doesn't, right? And it's a kind of clearly seen over history, right? Like Japan did it, and then all the Asian tigers did it, and now China's doing it. But the huge problem is that if you starve the consumer, then the internal demand is just not there. Anyway, I really hate this, and it bothers me that I guess that journalists don't push back on this in these articles. I guess because they're like pro-China, but it's just like, you guys have been doing this forever, and even worse, if you listen to some like old China hands, right? Like people who've been working around China or diplomatically with China. There's internal Chinese documents, and they're not even like that secret. And these documents have said, like explicitly in Chinese, apparently, if you are able to understand it, we are at war with America economically. Now, does that sound like negotiating with equality, respect, and mutual benefit? No. No.
All right, good stuff. I enjoy that. I think you have strong opinions on this. What matters to us, I think, here at on this show at least, the Bitcoin.com weekly news recap, is how this affects Bitcoin and crypto. And what we've seen here, obviously, in the last week or so, is a pretty large bounce in the Bitcoin and crypto price, risk assets across the board, actually. Let me just bring up the ETF details here. Yeah, basically, so after 2 months of consistent outflows from Bitcoin ETFs, including the two biggest single-day outflow events since the ETFs launched 15 or so months ago, we have seen a massive reversal in the last week. So you can see here, this is data from CoinGlass. So the last week, the green bars are inflows, red bars are outflows. You can see we've had over a month of consistent outflows, but in the last week or so, 2 days where we have nearly $1 billion of net inflows, and that's the highest net inflow days we've seen since early January. Now, obviously, money flowing into Bitcoin through the ETFs, that's good. But I think what's interesting here is that actually the ETF flows, obviously they correlate with the price, but one thing I've noticed here, if you look at the flows, is that the flows tend to be late in both the upside and downside. So the biggest outflows tend to happen after the price has already dropped, and the biggest inflows tend to happen after the price has already run up to some extent. So I think this supports the theory that the ETF, whatever money's coming into the ETF flows, aren't exactly representative, perhaps, of the, quote, like a smart money. And I think that leads us to another story here, which is that sovereign wealth funds, according to Coinbase Institutional's John D'Agostino, sovereign wealth funds are increasingly buying Bitcoin as a gold alternative. And what we've seen, according to his analysis, these sovereign wealth funds accumulated Bitcoin in early April, which drove up the price, and they primarily his theory is that they primarily accumulated it outside of the ETF.
OTC?
Yeah, so yes, exactly. Through OTC deals, basically buying spot Bitcoin and holding it themselves. I guess if you consider sovereign wealth funds to be the smart money, they are front running whoever's buying the ETF flows. I feel like that's what's happening here. But beyond that, sovereign wealth funds buying Bitcoin as an alternative to gold, obviously that's what we want to see. That's incredibly bullish for Bitcoin. It's been in the game theory all along, and it seems to be happening now, according to these insiders. So extremely bullish for Bitcoin.
Do you think it makes me think that I remember last year the numbers came out on who are the ETF buyers, and they were largely like individuals. They weren't big institutional players yet, right? Like
yes, exactly.
For example,
I've seen that.
My mother kind of stuff.
I've seen that theory as well. Like people who they didn't understand how to use Coinbase.
And they didn't want to.
But they can just tell their financial advisor to get them some of that orange coin, and it gets done for them.
And it sounds like maybe they are then that kind of, I wouldn't want to say stupid money, but yeah,
this
maybe
supports that theory.
Yeah, less sophisticated in that respect.
Yeah, I think this brings us to our next story.
So, but related to this, right, is the fact that, again, more bullish news is that Bitcoin reserves on exchanges are at record lows, right?
Exactly. Yes.
So Fidelity reported that Bitcoin exchange withdrawals as corporate treasuries and sovereign wealth funds accelerate accumulation, and that the supply is tightening. And this kind of reinforces the idea that Bitcoin is a long-term macro asset. It also fits with the historical, cycle of supply gets tight as the kind of bull run progresses, and then you see a parabolic move in price when the supply is very, very tight, and then supply starts to return to exchanges as holders want to realize some of those gains, right? So this is one of the good indicators to follow in terms of if you're trying to look for signs to, if you want to play this, when to kind of make some profits or something like that.
Yep. So another bullish data point. And beyond that, we have another big one here, which is a new entrant in the Bitcoin corporate treasury space. So it's called 21 Capital, and it is headed, the appointed CEO is Jack Mallers of Strike Bitcoin. What's interesting about this is that 21 Capital is backed by some big names, Tether, Cantor, and perhaps most interestingly, SoftBank. So you would expect that Tether and Cantor are sort of in the Bitcoin arena, but you wouldn't necessarily expect that SoftBank would join this. So I think the fact that they're in on this is pretty significant. It's a new type of player in the Bitcoin corporate treasury space.
It's also kind of like we've talked about before a lot about this in different aspects of all these companies kind of understanding that there's money to be made on this. And so they have basically taken their already existing business and kind of pivoted to a Bitcoin treasury aspect. This is like a brand new business made from whole cloth specifically for this thing. This seems kind of like the end game of this kind of strategy to me. I don't know what
I've seen some criticism here that from strategy holders of MSTR, like holders of the strategy stock, seeing this as actually a threat to strategy. There's a few other interesting things here. Okay, so like one is that Cantor, right, one of the companies that's backing this, who's put money into it, their stock price doubled pretty much when this news came out. So it's a similar dynamic, I think, to the Long Island Iced Tea Corp changing its name to Long Blockchain Corp in 2017, trying to like cash in on the blockchain narrative. So there's a bit of that happening here in the Bitcoin corporate treasury space for sure. Did Cantor, was that part of the calculus of Cantor backing this thing, that they would get a pump in their stock price? So, you know, that's one of the criticisms that you could make here.
I don't see why strategy people should be kind of upset by this, though, other than that they're worried that people will, you know, attention will move away from strategy. It doesn't make sense to me, really. It just seems like the logical conclusion to this kind of thing, right? Like, oh, it worked for a company that is, you know, losing product market fit over time, which I think MicroStrategy has been for quite a while. And then it worked for Metaplanet, which isn't even, you know, they're like a hotel thing, right? So why not a purpose-built business just for this?
Yeah.
I don't know. It seems obvious that's what eventually would happen.
Yeah.
In that case.
And,
yeah.
I mean, by the way, like just out of the gate, this new company, 21 Capital, they've got 42,000 BTC, which makes them the third largest corporate treasury holder of Bitcoin, behind a Bitcoin miner called Mara, and of course, Strategy.
Do you know where that Bitcoin came from? Is it just from?
So that's another interesting question. So a big chunk of it, so it's been pooled together by the backers, right? One of the backers is SoftBank, and I believe their portion was around $1 billion of the $4 billion. So people are wondering, oh, did they buy that? How long have they been holding that? It's not clear, right? Did they buy it just recently in order to form this new entity, in order to back this entity?
Yeah, that is interesting. I wonder when they got that, Mr. Massa.
Yeah, and side note, Mr. Massa was once a large Bitcoin holder, I believe, and kind of sold too early.
Did he really?
Lost out on a lot of potential, like a massive potential. So it's interesting that, like he's buying back in now, right? Even at these higher prices. So you could call that, I think, validation that things are probably going to be going higher. If this is one of the legendary investors in the world, like ever.
Yeah. Did you listen to that All In podcast where they were talking about that?
Yes.
That's when I got newfound respect for him. It was forgot what guest they had on, but he was like, you can count on, I think, one hand the number of investors who have netted $1 billion from their investment, and Massa has done it 4 times.
Yeah, exactly. So
he was like, that's insane.
Yeah, so I think it's very significant that SoftBank is in on this, is backing this company. I think it's a very significant point.
This leads directly into that, like, all this talk that we've been doing for the past maybe 10 minutes, ETFs and corporations, new in businesses getting into the Bitcoin game. This would probably make a lot of OG Bitcoiners kind of, fearful or scared, and it is. And so there's, again, a rising discussion or fear of Suitcoiners taking over Bitcoin and taking over this space.
Love that term, by the way. Love that term.
Yeah, I agree. So this is an article written by Sergio, a Bitcoin.com news writer. Really, really great guy. I encourage you to read this article. I enjoyed it a lot. But basically, I think the premise is rather self-explanatory, and then he goes into detail about it. But It's this idea that as Bitcoin gets adopted by mainstream institutions and traditional financial institutions that have a lot of money, then their influence on Bitcoin conceivably could grow as well. And you could see them start to maybe even influence the future path of Bitcoin. Is it like a kind of a deal with the devil, right? The Bitcoin ETFs I remember before the ETFs were coming out, there were a lot of OG Bitcoiners being like, I don't want this to happen. This is not good for Bitcoin. We don't need this, right?
We don't want the financialization of Bitcoin.
We don't need the financialization. We don't need billions and billions of dollars being put into Bitcoin being controlled by a handful of institutions.
We want people to self-custody their Bitcoin, and it's a valid argument. All right, I do think it's extremely important for a large portion of the network to actually custody their Bitcoin. Why? Because if you don't, then it can be taken away from you easily, much more easily than if you custody it yourself.
Also, though, like you can, I think Empire had a really good episode on the game theory that around this, where they're going into how are decisions to change the Bitcoin network made, and essentially, they're made by people who hold Bitcoin, right? So there's, miners hold Bitcoin. They also mine Bitcoin. You have individuals that hold Bitcoin, and then now you have like these OG people in the Bitcoin space that have a lot of Bitcoin, and now you have these ETFs and all these kind of traditional financial institutions that hold Bitcoin, and they're becoming a bigger and bigger potential voice in the future for decision making on changes to the Bitcoin network, i.e., soft fork, hard fork. Are we gonna adopt this new opcode thing or not? And so, I think it's very legitimate whether how much Bitcoin you want to be controlled by these kinds of organizations.
Yeah, but it's interesting though that at least if you, on the face of it, if you believe what they're saying, these Suitcoiners, they sound a lot like OG Bitcoiners or Bitcoiners circa 2015. They sound like I thought about Bitcoin when I first encountered it in 2017. And what they're saying is this is a currency that is independent of the government. It has a fixed supply. It's a hedge. It's censorship resistant. They're saying all the talking points. So that's interesting. And then on the other hand, a lot of like non-suit coins call them, non-suit coiners call them the class of meme coin, the new entrants, like a crypto, like a degens.
Trench warriors.
Trench warriors, degens. These people tend to look at Bitcoin and sort of like gloss over, like skip it. They don't have that raw like ideology about what it could be.
I think, and
they're not excited by it. They're just looking at they're looking to profit from meme coins.
Yeah, and so I wrote my weekly from like 3 weeks ago was about this, because I had noticed in lots of interviews and just different statements from people like Larry Fink, even who they really sounded, genuinely enthusiastic about kind of these classic benefits of crypto. And I've had lots of interesting discussions with people about how, do you believe them? Do you think they actually believe this? And honestly, I do. And here's the reason why: is they already have a lot of money, right?
Yeah.
These institutions, and decentralization is actually able to help them keep their money, right? Because it makes it makes their money kind of uncensorable. They don't have to worry about the same kinds of things that even, single holders have to worry about, right?
Yeah. So the same things that appeal to you and I when we first heard about Bitcoin as just like normie street people appeal to these billionaires. It's the same. It's the same game theory.
And then the same kind of thing, like, wait.
They don't want it to be co-opted by the government,
and they don't want it to be someone else's technology. Like J.P. Morgan's like, I have to use Merrill Lynch's rails. No, thank you.
Exactly.
You know what I'm talking about? Like
neutral. They want the neutral thing. Yeah, and then, they're worried about government influence as well.
Yeah, and then when you talk to young people, I mean, not to get too whatever old manish, but the dissatisfaction and the distrust in institutions, and the kind of the feeling that you have to make enough money to get escape velocity, or it doesn't matter at all. And there's a lot of truth to that. I think that it means that a lot of these new entrants to crypto, they don't care. They want to make enough money so that they don't get stuck in the rat race or the whatever for the rest of their lives. And
they don't care about the ideals.
Well, I think they're
as
jaded.
Much as the money. Yeah.
I think they're jaded. I think if you look at like the U.S. government or other governments and you don't trust those institutions, I think it makes sense. Then you would look at like crypto institutions and you're like, yeah, whatever, it's going to be the same, right?
Yeah.
I don't care if it's Ethereum or Solana or Base.
Yeah.
Who cares about how decentralized it is?
Yeah.
So.
All right. So bullish Suitcoiners.
I am a little bit, honestly. Although on the Bitcoin governance side, it'll be really interesting to see if they actually start to flex their muscle. On that Empire podcast, I forgot the name of the gentleman that they had there. He seemed to think that because of all the like ETF governance rules, and then all of the institutions themselves, the custodians, they have to have all these like very, very long legal briefs to determine how they act. What ends up happening, at least this is what this guy said, up to now is because of the legal requirements, they move way too slowly to have an impact on kind of Bitcoin governance issues. And that is to say, and so then individuals like you and me, or wealthy single individuals, they end up having an outsized effect because they can kind of signal with their Bitcoin pretty much instantly how they feel one way or the other about different governance issues. I hope that's the case.
That's an interesting point. Bitcoin governance it's a fascinating field. I think there's critics of it, but nobody I think is really sure how it's going to play out when if a change really needs to be made, or if one party has an agenda that they want to push. I mean, we've seen how it's played out in the past with arguably censorship on certain forums where it's being discussed, and it's going to be the whole thing is going to be very interesting to watch.
I mean, the opcode battle has been talked about for at least more than a year, right? Like, this is the next big battle, and it doesn't seem like it's even anywhere near coming to a head, right? Like, so
yeah,
I'm actually a bit surprised by that. I thought we would see more kind of progress towards some kind of fight, but it just seems to be building. So I don't know.
Yeah.
I hope they can figure it out, though. I think opcodes are, yeah.
Yeah. On that note, let's wrap it up, David. I know it's you've had a lot. You've just got off the flight. Thanks for joining us, and thanks for everyone for listening. We'll be back this time next week on Bitcoin.com's The Weekly.